Good afternoon, everybody. Welcome back to my channel. I am going to be talking while uh, you know, while I am multitasking. Welcome back. Welcome to my channel. It is my dividend growth channel. This channel is all about investing, growing your net worth. Uh, I am 35 years old. I've been the past couple days. I've been consuming so much financial content from uh, watching the money guys, and as I prepare to make my videos, but also in uh, not only just to entertain but to inspire, uh, going through different steps. I am trying to not say I'm a pivot, but I'm noticing that hey, my investment pie right here, my investments are growing a lot faster because I'm contributing roughly 1,000, sometimes 1,200 per month. So as that's growing, I also don't want to lose sight of my retirement planning because my taxable dividend portfolio is my taxable account, as we all know, my taxable bucket. When you understand the three bucket strategy, the first bucket is your money bucket, which I have right here. That I have money that I put in to accumulate, used as a like emergency fund slash use it as a bank account so that I'm able to accrue interest on it. I have my investment account where I want this after tax bucket to grow. And went through a lot of my positions on my last video when we were talking about how I dumped $1,000 into the market and went about different stocks, ETFs that I bought last week, well, since we end this week, right? But in this video, I wanted to focus on my investment pie, no, my retirement pie. My retirement pie is at $33,123. I'm 35 years old. I plan on retiring at 50, so I can move out the country. But I'm not gonna be able to access my retirement pie until 59 and a half, which means that from 50 to 59 and a half, it's going to be continuing to grow. And also from 35 to 50, I need to also, even though I'm focusing on growing my after pie, I also don't want to leave out my retirement because I still want to contribute to my retirement and to get this to 100,000. I've been so focused into getting my taxable buck account to 100,000 that I at least want my retirement money to hit 100,000 so that I want to give myself, my future self, chance so that when it finally hits 59 and a half, that when I take money out my Roth IRA, I can take it out tax free. I'm gonna show you guys what my plan and what I'm trying to do. So what you see is here's my retirement pot. I have my Roth IRA, I have my rollover IRA, I have my 401k. Uh, Unlike what the money guy says, you invest into with your company's match. My company does not do a match per se, which it sucks. They do profit sharing, and so it's a way to get you to stay with the company for a period of time, and they are matched to kind of ish what you put in based off of 8% of profit sharing. But the profit sharing doesn't hit into the beginning of the year around in January, and then also to qualify, you have to be with the company for about a year. My 1 year anniversary is in June, with meaning that from June to December of this year, I will only be able to qualify for 6 months of profit sharing next year, and then the year after that, if I stay, then I'll finally be able to claim the full 8%. It's weird, but I'm still contributing to my 401k. As you see right there, it's at $4,300. It's growing. Thinking about increasing my investment rate with that. We only focus on what we can control. We cannot worry about what we cannot control. Here is my Roth IRA, and we a lot of times you're like, what's the Roth IRA? It's a taxable account. It's a retirement tax advantage account that you the money that you put in, you've already taxed because your money It's being taxed by the government. It's being taxed when you pay your taxes. So the money that you have in your bank account is already taxed. So when you put money into the Roth IRA, it's a tax sheltered account that when your money grows, it's going to grow tax free. Now, rather if this account become $1,000,000, $750, I've already gotten to the account to how I want to grow this account, and I have a couple like haymakers, Hail Mary plays, which is Lamb Research, Cadence Design Systems, which is in the semiconductor space. I have high growth ETFs. The SMH is the VanEck Trust Semiconductor ETF that has the heavy exposure in NVIDIA. So I have that covered. Then QQQM is investing into the Nasdaq, investing into technology. So if I want this to grow and to compound, I have at least 16 to 25 years, give or take, for my money to grow. That means I have 16 to 25 years that I need within that time. I need some doubling. I need some high growth stuff. I have AMD, and then I recently bought Granger. Because Granger has been a company that has been beating the Nasdaq. What I plan on doing is because I contribute $500 a month into my Roth IRA. What I plan on doing is when this finally hits above this threshold, I'm just going to sell it. I'm just going to buy VOO, the SP 500, and the top three funds that I'm going to grow my account is going to be QQQM, SMH, and VOO. And then I'm going to have Cadence Design Systems and Land Research as my satellite to grow and compound. And hopefully down the line, it grows to like $50,000 each. And the goal is I have this monthly paying cover call called Jeppy. It pays roughly a 9% yield. I'm using those dividends that I get paid monthly. I'm reinvesting back into to JetQ so that can grow, right? Then I have Cadence Systems and Land Research. I'm going to let that grow. Invest into it, but let that grow. Then I'll have my 3 ETFs. Let that grow. Once at the end, when I'm ready, as long as I have roughly $750,000, I'm good. Because what I'll do is that I will sell a lot of my high growth assets and I'll convert it and I won't have to pay any taxes because it's in a tax sheltered account. I would convert a lot of those and I would just put into right here, JebQ. I'll probably start a position in realty income and then I'll probably start a uh, one more, like maybe Devo or uh, Main Capital or maybe Jeppy, QID, just or just a combination, a little bit of those, and then I would just have those because a lot of times the threat is that when you invest to cover calls, uh, it's a cap. It's a cap to how much price appreciation of the ETF because they're doing cover calls. Then what I'll do is that I would keep VOO as my growth fund SP 500, and yeah, I would just transform this account as in it would just be paying me monthly income, paying me let's say you know $3,000, $5,000 per month, tax free, and with that I wouldn't have to sell any shares because I will put the remaining balance of 200, 250, 300,000 into VOO and just let that just continue to grow. Whatever it's a bear market, stock market crash, I will still have, Jeppy, JebQ, uh, SPY I, whatever I decide to buy, and then maybe a little sprinkle of Mo, uh, Arbor Realty Trust, um, what else? ARCC, Rock Capital, have a little bit of that. Then I'll forever just receive dividends. So I have monthly dividends, I have quarterly dividends, and then I'll just live off that. And then the smart thing about it is that while I have that in the background, I still have my dividend growth portfolio that I'm growing, that I will be living off of, that I will have actually, have actual Google and Meta and those companies growing in the background, so that if I need to sell that for income as well, I can use it as well. It's pretty smart, right? That's just my Roth IRA. And then lastly, in growing my retirement account, I'm focusing on retirement planning for myself. I have this rollover IRA, and in my rollover IRA, I'm really focusing on have a couple high growth plays in this account. It goes up like here, it goes up $400, $500, and then a lot of times it go down 1,000 because a lot of these companies are high growth, small caps, or just high growth, large cap companies like Nvidia, Costco, Cintas, KLAC, AMAT, Eli Lilly, and you see right here. Well, if you see the video that a couple of days ago, these last 4 or 5 down here are totally in the red, bloody, bleeding. So it was a good day. But so moving forward, the goal is now to start focusing on my Roth IRA, beefing up and paying more focus, maxing out my Roth IRA for 2024, getting my Roth IRA this year to rough $15,000. Hopefully, if I have anything left in the chamber, to get this to at least 20, 21,000, and then from contributing to my 401k, this will be at the end of the year to be around $6,000, and then I can focus more again on boom. Then I can focus back on my taxable dividend portfolio. Still going to be investing this along the way, but I still need to now focus on my retirement because I need for those to grow. So uh, if you stick with me, you rock with me, you see that I got a plan. All I gotta do is enact it. Uh, yeah, they say in order for you to lead, you gotta lead proper. Gotta have a plan. Hey, that's all a part of leadership, baby. So I got a plan. I'm focused. I got a budget. I'm following it. And a part of all of this is just staying consistent and living below your means. And yeah, so hopefully you guys enjoy your weekend. Enjoy this video. Uh, Probably next time you probably see me, I'm gonna be posting plenty of videos of me in Brazil, drinking capianas, kicking it with a lot of Brazilian chicas, barwiquas. Ooh, holla at your boy.